All right, I'm just going to wait a few moments here as I see attendees flooding in before we begin. Okay, well, hello everyone, and welcome to our panel today, Reinvent the Mortgage, the do's and don'ts of building a digital homebuyer's journey, hosted by the Canadian Lenders Association. We have a really wonderful group of panelists today and a great discussion moderated by Pat Casulo of Portfolio Plus. Pat's going to take us through a panel discussion, and then we will be accepting questions live. So as a reminder, you can feel free to submit your questions at any time throughout the discussion, and hopefully we'll be able to get to them at the end. And as always, this panel is being recorded and will be emailed out to all of you afterwards to rewatch. Before we begin, I just want to give a huge thanks to our sponsor for this panel, Portfolio Plus. Thank you so much for bringing this group together. But without any further ado, I'm going to hand it over to you, Pat, to kick it off.
Perfect. Thank you, Danielle, and thank you everyone for joining us today. As Danielle mentioned, my name is Pat Casulo. I'm a senior sales account manager at Portfolio Plus, and I'm very pleased to moderate this panel discussion today. So at Portfolio Plus, we work alongside financial institutions, providing configurable core banking software solutions that includes an open banking platform that is used by financial institutions to deliver their valuable products and services. And being in the financial industry, it is incumbent on us to keep up to date on current market trends. We frequently publish white papers and articles that focus on key areas of interest for business and technology. And one of our more recent white papers, Reinventing the Mortgage, is the reason for this panel discussion today. You know, there's a lot of buzz right now on open banking. If you're on LinkedIn or Twitter, you'll see a lot of posts and comments on open banking from a variety of different geographical areas as well as different markets. You know, we're being told open banking in Canada is just over the horizon, and it presents many opportunities for financial institutions to disrupt the traditional home buyer's journey and provide that frictionless customer experience. Today, we have an amazing panel of experts in the mortgage industry, and we're going to discuss how they are preparing for open banking to reinvent the mortgage and provide that superior consumer experience. So we want to come together today and share our insights for you to take back and apply in your everyday business. So without further ado, let's meet our panelists for today. So I'll pass it over to Vishali if you want to get us started off with an introduction of yourself as well as your organization.
Great, thanks, Pat. I'm Vishali Hollins. I'm Senior Director of Retail Lending Transformation at EQ Bank, which is Canada's challenger bank. So you might see our big promotion right now for Make Bank. We are out there across Canada offering great high interest savings accounts, and of course, always looking to improve our digital customer journey because we are an online only bank. So thanks, Pat. I'll turn it over to Wayne for the next intro.
Great, thank you. My name is Wayne Kainu. I'm the head of mortgages at Neo Financial. So like EQ Bank, we're also a challenger bank, although we're relatively new to the market, only 3 years old. And, you know, we're really focused on, once again, this is a great conversation for us because we're reinventing how Canadians think about banking and, you know, helping Canadians grow their money, spend smarter, that sort of thing. So that's where we're at today. My background has been in mortgages for about 20 years or so, going back all the way to the banking, a couple of the big five, 10 years in there, and then in the broker channel for about 15 years. So go ahead, Justin.
Awesome, thanks, Wayne. Hi, everyone. I'm Justin, CEO and co-founder of Pine. We're a new direct-to-consumer mortgage lender online. I've been working at digital mortgages now for about 5 years. I started Pine last year. Our goal is really to provide an alternative to banks or brokers, just an online mortgage lending channel. We are offering prime mortgages, so insured and kind of AAA customers right now. You can find us at www.pine.ca, and super excited to speak on this panel.
Perfect. Thanks, everyone. So I'm really excited to start this discussion today. So I'm literally just going to jump right in. So we know the financial industry must continue moving forward with digital, and the pandemic definitely provided us with that extra push to move to digital. You know, traditional bricks and mortar were closed, but financial services were still required. And whenever you're thinking of making changes to a process, there's several factors that you need to take into consideration. So you have technology and you have people. So your clients, your partners, and your own staff. So the first question I have for the panel today is, in preparation for open banking or to fill an immediate need, to digitize the mortgage process. Can you share where your organization is on the journey? So have you started planning how you will migrate to a digital mortgage experience, or have you already made certain process automated? So maybe Justin, you want to take that first question and kick us off?
Yeah, for sure. So Pine was essentially built digital from the ground up. When we started the company, everything was digital first, and we're really proud of that. So our entire stack, from our point of sale, which is what the consumer sees, to our underwriting system, to how we interact with our funding partners, that's all digital and technology that we've built ourselves. So really, our experience as a team in building this has really set us up to be here like from the beginning. Now, as more parts of our partners become digital, we're going to embrace that as well and integrate with them where possible. So for us, digital mortgage is no different than a regular mortgage.
Wayne, what are your thoughts on that? Anything to share or add?
Yeah, exactly the same. I mean, from day one, knowing that open banking is going to be something that that we're all going to be a part of. We've seen that happen in other parts of the world, and the difference is made. So from day one of building out our Neo platform, open banking's always been part of the that initial thought that, hey, we can go ahead and flick a switch if we need to at any point, and start to do things a little bit, open it up a little bit more in regards to what we're able to do for Canadians.
Perfect. So Fajali, I'll maybe pass it over to you, see if there's anything you want to sort of add to that.
Yeah, no, I think just exactly what Wayne and Justin are saying as well. I mean, we were digital first. We don't have any branches. We don't have any opportunity for a customer to come in and physically get paper for anywhere. So we have operated digitally and always look for new vendors, new suppliers, new partners that we can work together with to really move us along in our digital journey. Because there's always the evolution too, right? We can't just stop. We have to continuously look for new ways to make the customer experience and broker experience better. And open banking is absolutely something we're looking forward to using to be able to enable that experience.
Perfect. So if we take a look at where things start in that mortgage process in terms of the actual applying. So when you think of mortgage applications, I typically look at it from two primary sources. So you have your mortgage broker. So I, as a consumer, visit with a broker, engage a broker, provide all my information to them. That broker submits the application on my behalf, or you have a different sort of stream, which could be direct to consumer. So I submit the application on my own, which again could be bricks and mortar, visit a branch, complete the application, or log into my online banking, submit that application online. So the question I have is, how reliable are you finding the information being received from both those sources? So paper-based versus digital. And do you have a separate process when the information is submitted from different sources and perhaps not reliable? So maybe if Vishali can kick us off with that response.
Yeah, so we don't have a direct to customer channel. We operate directly through brokers. So that's our channel. So in level setting that, what we find in our journey is that it does happen that the data that comes in is not necessarily reliable. And that's for lots of reasons. It could be stale dated. We might be asking for certain details and we get partial details. So as a result, we actually perform a lot of validation on the data using many methods. Some of the things will be familiar, I think, for Justin Wayne here too: Google searches, property searches, bank statement validations, all those sorts of things. So for example, is the property in the condition as indicated on the submission? And for our business for self clients, is the company registered as it was indicated? So, it's not that people are trying to submit bad information. It's just sometimes it's not complete. And so therefore we have to do a little extra due diligence to make sure we have complete information so we can adjudicate the file.
Perfect. I guess Wayne, what's your experience been like?
Yeah, so we're obviously direct to consumer, so we're not in the broker channel itself. So I think for us, making sure, very similar to EQ Bank as well, and Vishali, is that the information that we're receiving isn't necessarily that is not accurate, it's just not complete. And so really that's always been, well, so far has been our challenge, ensuring that that's complete information. And then of course, knowing that we are virtual online, there is a potential of having fraudulent information, or clients submitting fraudulent documents, things like that, because we're just virtual. So we know that there's a higher risk of that. So we we do depend on our existing resources, existing technology that we've created for our credit card and our money account, that sort of thing, and using that information to make sure that we're reducing any risks on our side.
What about yourself, Justin? What's your experience been?
Yeah, so similar to Wayne at Neo, we're only direct to consumers. So we don't, today, we don't take any leads in from brokers. And, generally we find information to be like generally reliable. And I think I'm saying the same thing as Vishali. It's not that people intend to, we don't see a lot of people intending to commit fraud. It definitely happens here or there. It's people submit information believing like, oh yeah, my salary is, 75,000. It's actually 77,000. So these things change our calculations and they change our underwriting. So what we see is it's really the small details that matter that you have to validate, but for most part, people are giving fairly reliable. And given that we're direct to consumer, what we do is we, as soon as the customer completes, we prompt them to start providing the documentation so we can start underwriting them immediately. And that's something our system does is it looks and say, okay, if you're business for self, and we see these documents. If you say that you have a renter and you have investment income, then we need to start seeing that. And then we start to validate it either through third-party sources or by looking at the documentation.
I guess maybe just a follow-up question for anybody to pick up, but so what I heard is the data coming in may not necessarily be complete. So when you're dealing with data that's coming in that may not be complete, obviously you need that data to make decisions. What type of overhead does that create if you're having to spend that time looking at that incomplete data to validate it? Perhaps it's reaching out to the individual that applied. Can you kind of gauge like what that would look like in terms of additional overhead? I'll just kind of put that out to the panel, whoever wants to pick it up.
Yeah, I'm happy to take up a part of it. Definitely. When you're dealing with incomplete data, you are reaching back up to the broker in our case and being like, so we got 3 months of rental income. Can you give us 12 months? And so, that naturally causes a delay in terms of us getting back to the broker with what type of terms and offers can we give to this client. It is a lot of back and forth as a result, which just, again, is not just overhead, but it's also time in the change. You've got a customer on one end who wants to feel comfortable that they're going to be able to afford the home that they want to afford. But it's going to take time because we have incomplete data at that point.
And sorry, yeah, same thing for us. I mean, we've had to, our underwriters, for example, and our sales team would have to extend hours just to be able to get a hold of these clients. Because again, we're not dealing with the brokers, we're dealing with the clients directly. So extending hours into the evening and of course on the weekends as well. So we found out that right now we're essentially 24/7. I shouldn't say 24/7, but seven days a week, which is a little bit, can be challenging for sure. But that's the best time to get a hold of clients when they have a little bit more time. They're not at work, that sort of thing, in the evening, and of course on weekends.
Yeah.
Do you have anything to add there, Justin?
No, this is a similar point.
Okay. So maybe if we kind of shift now and take a look at sort of the underwriting adjudication process, which arguably is one of the most time-consuming aspects of that mortgage process. So we did talk about data. So again, once that financial data is collected, lenders need to assess the consumer's financial history, ability to pay, verify the borrower. So when we look at digital mortgages, many lenders are exploring and developing auto adjudication functionality to optimize and streamline this process with the overall objective to remove manual processes and reduce as much friction as possible for the underwriter and the consumer. So when it comes to automating the adjudication process, where do you see the biggest opportunities for the consumer and your organization? Maybe I'll pass that one to Wayne first to kick off.
Sure. Yeah, and this is a big one, I think, for the entire industry. The auto adjudication. I know many lenders have been talking about auto adjudication for years, and really it's only probably recently that it's real. And again, it's a combination of a few things. Is once again getting the proper information, the correct information, accurate information that we're able to make that decision sooner. But one of the advantages that we do have is the fact that we already have, in most cases, a lot of our clients, for example, they're already in the Neo ecosystem, so they already have a money account or they already have a credit card with us. So we can kind of see some of their spending habits, but more importantly, we do have a lot of information for that client already in our system that we can actually pre-adjudicate in many cases. So that's something that's a huge advantage I think that we have. However, I think there's going to be, obviously, that's just a very small step into many of the big steps that other folks are taking. So, but that's kind of where we're at today.
Perfect. And Vishali, what are your thoughts there?
Yeah, I think the auto adjudication, I'll say for bankers with really good data and analytics teams, the auto adjudication part is probably the easiest challenge to surmount. You can create models that are really robust, very reliable to auto adjudicate. The challenge for us is really around the validation of the information. That's where, we spend a lot of time and energy. And, if we could really move away from that, we would love to have our underwriting teams spend their time on the real challenging cases, get into the fun stuff and the different stuff in terms of mortgage lending. So it'd be great to actually have more so better validation up front, auto adjudication in play for those mortgages that can fall into the auto adjudication category, so that where we're using the human touch, it's really around those special or fringe cases.
What are your thoughts there, Justin? Anything to add?
Yeah, I think the biggest opportunity, at least for auto education, is it's not crazy hard, but what we've done and where we see a lot of opportunity is using the auto adjudication to place the borrower into the right product and building out the whole kind of condition tree off that. So if the customer is, more qualified for, program A versus program B, we actually go through and we think that there's a big opportunity to run through, put them in that automatically. And what that does is it kind of saves everyone time, saves the consumer, because they get a recommendation and they say, hey, well, if not this one, then maybe these three. And then it saves our kind of sales and underwriting team, because they're not spending too much time on product and pricing. They're spending time actually communicating what do these different products mean to the borrower. Like, why do I care about program A versus program B, and what are the trade-offs? So providing that kind of human advice is where we want our people to spend their time, and not as much on like, oh, can I just like plug this into a calculator and then like scroll through 10 different options?
Yeah, that's great. That's a really great point. I'm going to take a question from the audience because it's related to broker versus direct to consumer. So the question is, what thinking dominates when you choose a channel, direct or broker, to originate mortgages? And the second part of that is it more of a strategic approach or more of a technology issue? So I don't know who wants to tackle that one first.
I'm happy to, because I've seen kind of both in the world. When Pine started, we chose direct to consumer very specifically because of our vision to support consumers throughout their financial journey and home ownership. And we knew that to build that long-term relationship, it was good to start it up front so they can interact with our brand, get to know who we are, and then serve those customers. So while broker is a tremendous channel for a lot of lenders, it's one that we felt, at least for us starting out, was too disjointed, and we don't know how other people are speaking about us out there in the world. So that's why we kind of stuck away from it. Now, I've worked with large lenders, and I could say for a lot of them, I can tell you technology is a barrier. Like getting the flows and getting everything from the consumer side to the underwriting to the servicing to the funding, technology can be an impediment. I'm sure lots of people would rather have been in market earlier.
Wayne or Vishal, what do you think?
Yeah, like being in the broker channel, I mean, I agree with Justin. I mean, like the technology is definitely the biggest thing. I think that the expectation for brokers today is obviously is speed, right? To make sure that if they're submitting a deal, that they're getting that response as quickly as possible, making sure that the documents that are being submitted are confirmed in a timely manner, whether it's 24 or 48 hours, that sort of thing. So those expectations have already been set. I think making things more efficient in the broker channel is extremely important for us. We're already direct to consumer out of the gate with our other products. So it just made sense to continue that for now. And whether or not we get into the broker channel, that's something that we haven't made that decision as of yet.
Anything you want to add there, Vishali?
I'd say in having heavily broker channel experience at EQ Bank, it's really around a strategic decision. When we started up our lending business, it was around, it would be great to get into the mortgage industry, but leveraging brokers and using their expertise to really help guide us in this alt market and the customers we serve to really build our book of business. So I would say it was strategic first. And of course, technology supported that experience for the brokers. And of course, if we had to build, if we decided to go customer first, then it would be, building that customer platform with that user experience versus where we are today, where we build broker first user experiences.
So if we maybe just take a moment and focus sort of back on digital. So where do lenders and consumers experience the most friction in the mortgage lending process when it comes to digital mortgages? And do you see open banking and APIs potentially eliminating some or all of that friction? I'll maybe have Justin kick us off there.
I think that there's a lot of things that open banking will support. But really where we see the most friction is like when the baton gets passed. So even as a lender, you know, you're still working potentially with funding partners. You might be working with like lawyer, or you're most likely working with lawyers. And there's the consumer. So while we think that open banking will reduce friction in the long run, and I've actually worked a lot on this, we think like right now, there's a lot of other things that are kind of higher up for us on the process. But you know, my experience with open banking is very interesting because I worked a lot on it in the US. And what I would say is it's kind of a long-term structural change that allows you to do things faster. But based on where we are in Canada, I don't see that happening immediately.
What do you think, Wayne?
Agree 100%. I mean, I think that there's going to be, it's a work in progress for sure once we do get there. And I think, you know, obviously I don't have the experience working with, you know, that concept as of yet, you know, someone like Justin has, but, you know, certainly I think there's going to be a huge opportunity, you know, obviously, and I think it, you know, some of the friction that we see today with lenders and for clients is, for example, documentation, getting, you know, statements from one bank over to the other and getting their pay stubs and a letter of employment. I mean, there's a lot of documents that obviously are required that I think that's going to not necessarily remove all the friction, but certainly make a big impact for sure.
Vishali, what's your experience been?
Yeah, I agree with Justin and Wayne. It's really removing all the obstacles from a customer experience standpoint and broker experience standpoint. I mean, there's obviously all the documentation. If you've got rental income, pay stubs, and all this, like it can eliminate a lot of that. But then also through the journey, like it will eliminate some of those obstacles because all the data will be in one place. And then if we think about what a customer actually has to do to get a mortgage, like they kind of have to be tech savvy. You have to know that, okay, I'm going to sign documents in DocuSign and I'm going to have an e-signature, but then, oh, this company uses OneSpan. And like, there's all these hosts of applications that we use along the way to kind of continuously validate information. And so some of that goes away for the customer as well. So it's not just providing the information, but then it also eliminates the need for the customer to go through so many hoops to be able to get to the end point of getting money in their account.
Yeah, great points. Which kind of leads into the next question a bit. So personally, I feel that the average Canadian consumer doesn't have a full understanding of the home buyer's journey or open banking. So I kind of look at it from two viewpoints. So when I think of Generation Z, I think of my two teenagers, so 16, 18, grew up with technology. So all the gadgets, iPhone, iPads, laptops, extremely tech savvy, absolutely no fear of technology. Through discussions, I know they have aspirations of home ownership at some point, but I also know they have limited knowledge of how to get there or what the path there is. So like what a down payment is, what type of options there are to save for it, you know, what's a 5% versus a 20% down payment, credit cards, how does that impact your credit score? Then on the flip side, I think of my mom. So my mom is a senior, 70 plus. Very limited experience with technology, understands traditional mortgage and savings and GICs because having gone through those cycles during her lifetime. But today, if you were to ask my mom what open banking is, she'll tell you it means all her personal and financial information is going to be online for everyone to see. Home address, SIN number, bank accounts, balances. So that really kind of adds to that fear of technology and digital banking. My mom's still the one that will drive in a snowstorm with her check to go into the bricks and mortar and make that deposit. So when you think of the disparity between those different generations, as well as knowledge gaps, whether it's kind of business and or technology, how can we, as part of the financial industry, improve the home buyer's journey and the knowledge of open banking for the average consumer? I'll maybe pass this one off to Vishali to get us going.
Oh, okay. So you're giving me the tough one. Okay, thank you. So I think, you know, what's true today, as it's always been true, is we're actually all learning differently now, right? So the best way we can support that journey is through offering education and advice in many ways and many channels. You know, I think about stuff that they're sharing on TikTok right now for younger people, and how that's being consumed and learned. But I also think about my mom, who's probably about your mom's age, Pat, and kind of in the same bucket. Like, how does she take advice? What would she think about open banking? And I know that she actually relies on her peer group to figure out, what do they know and how do they work? And they rely on their advisors. So I think it's multi-pronged. So firstly, for EQ Bank, at least, brokers provide a great source of information for our customers. So that's kind of that human touch element. You need to have the human touch at the right places to be able to offer an education. But as a bank, for those of us who learn differently, we also build learning modules and have details right on our site about this information. So we want to be able to create a hub where people can go to and get good, reliable information. And finally, through the application process, and I will say through open banking, we can actually create a solution-based journey. So as a lender, if I know more information about your situation, I can offer digitally more options that may better suit your situation. Because I might be able to see your transactions, investments, spending habits through all sources, and offer a mortgage, a certain level of home equity line of credit, offer you advice on spending so that you, as a new home buyer, you can quickly assess if your purchase plans make sense for you, and then offer you advice, like maybe 5% makes sense, maybe 20%. But those options can only be shared when we have the right information to help give you the right advice.
Okay. So Wayne, what are your thoughts there?
Yeah, I agree. I mean, at the end of the day, it is a tougher question for sure. But I do believe that, in terms of, for the younger folks, I believe there's an opportunity for even gamification and teaching somebody along the way of how to save for their down payment and what they need to do to get approved in, say, 2, 3, 5 years, that sort of thing. And I think that's the one piece. And I also agree with Shelley in terms of the our older customer base, because we do have a lot of older customers through HBC, and so the average obviously is quite a bit higher than, say, some of our new clients. And so we're looking at those clients that they need that personal touch point, and we have an incredible CX team that does a great job at going through the process of onboarding when it comes to, say, their account or their credit account, that sort of thing. So all that is extremely important, but the opportunity to educate Canadians, especially young Canadians, with that sort of gamification, education, financial literacy, extremely important. And I think that's a big opportunity for us.
Yeah. What about yourself, Justin? What are your thoughts there?
I mean, I think financial literacy is a big problem in a lot of countries. Canada's included in that. And I think the solution is to start it early, right? Like, you need to catch people early in their educational journey to start explaining to them like what the different financial concepts are, and building up for home ownership if that's a goal for them. It's not the goal necessarily for everyone. Renting is a totally valid option. I say this as a mortgage lender. And understanding that, like, to get in front of these people, you need to educate them early. So we do put, like EQ, a lot of informational content on our blog. We want to get people interacting with that and sharing and learning. We've made this a big focus for the next year. But I think it has to do a lot with the financial system. If you ask most people where their bank is, their primary bank is likely the one that their parents used, right? And that's a uniquely Canadian phenomenon. So working with kind of the broader ecosystem to get that knowledge instilled early is super important, whether it's digital or it's through the traditional education system is a change that we need to do, especially given the economic uncertainty that we have in today's environment. In terms of open banking, I don't think consumers actually need to know what open banking is. I don't think it's relevant. I think as long as it works and we get there as an industry and it provides them the benefits, then I don't think they really it's necessary. Obviously, understand the security and the risks of that, but otherwise, I don't think it's a main point in financial literacy.
Yeah, all good points. I definitely agree with the education at the younger age. I almost feel like it should be a course in high school of some form, because if you think of it, that's typically the age where they start part-time jobs, generally have a steady flow of income, bi-weekly, whatnot. I mean, they still come to mom and dad for extra money, but generally they'll have that pocket money. So I think creating those good habits early on just kind of sets them up for when they hit their 20s, university, full-time job, etc. So totally agree with those points. So we actually have 2 questions from the audience. So the lead into the question is, panelists have talked a lot about digitizing the home buyer's journey from a consumer or broker perspective. And the question is, how do they see engaging and working with other partners digitally in the home buyer's journey? Example, lawyers, appraisers. I don't know who wants to take that first stab.
I'm happy to take it. We are actually working with our partners digitally. So we have a partner, FCT, First Canadian Title, and we work with them digitally to ensure that the solicitor engagement, all the funding documents, and everything are transmitted digitally to ensure that, you know, it's not, again, a lot of paper moving around and everything. And we constantly work in partnership to figure out, are there better ways to transmit information safely and securely, but also to digitize it even more so that, you know, we're looking at a bigger piece of the pie. So we actually actively engage with our partners, you know, every month, discussing new ways, because there's also new technology that's sprouting up all the time too, right? So it's never one and done. It's an active engagement with all the partners to ensure that we're continuously kind of challenging ourselves to push the digital envelope in terms of how we're lending.
Wayne or Justin, what are you thinking there?
Yeah, I think getting everyone on board is, you need something to rally behind, because I think everyone can kind of approach digitization on their own, but there's no standards. So standardization is one big piece that helps like digitize the whole journey. So in the US, they have a data format called MISMO. We don't have anything in Canada, like there's nothing equivalent. Everyone kind of keeps data in whatever format they want. And if you think about it from a technology perspective, and like, you know, side tangent here, I studied finance, but I actually had my first job at a school as a software engineer. So kind of bring that perspective to this conversation. It really comes with getting the technology side, everyone aligned, and having an industry set that expectation, so that data can be transmitted under the same formats without translation. And then from there, all the partners can start communicating with each other. And it really takes a level of coordination that I don't think we've seen yet. But we are seeing individual people pick up the pieces. Like there's digital lenders, and there's starting to be digital lawyers, and closings are getting a little bit better. So it's getting there. But for it to really take place, the work needs to be done at the infrastructure level. And I think there's not enough people kind of talking about that side of the progress that we need to be made.
Yeah. Anything you want to add there, Wayne?
Yeah, I agree. I mean, I think this is, we're talking about the future for sure. And, you know, that going from, say, excuse me, application all the way to funding as efficiently as we possibly can, integrating all the partners throughout that process. You know, I think, again, that's a huge part of the future for sure, that I think it's we're not too far away from, but it is going to be, it's a big lift for sure.
Perfect. So the second question from the audience is, so email isn't necessarily secure, yet at times consumers are asked to email their information, especially during the mortgage process. Is there anything happening from a regulatory point of view to protect Canadian consumers? Sometimes consumers don't understand the requests and data sharing methods are not always keeping their private data secure. Maybe if you want to jump into that, Wayne, and just kind of continue from the last.
Sorry, yeah. You know, I think it's funny because the industry, especially in the mortgage broker industry, pretty typical to, you know, for many years is to submit documents and personal, very sensitive information to lenders, and or to the brokers, and then the brokers obviously submitting that onto the lenders. I don't think there's, I mean, it should be. I mean, it should, you know, there is a lot more platforms today that where clients can actually upload documents, you know, through a secure server, that sort of thing. But, and I think that will continue, so they have a lot more trust in the system. But I think right now, for speed and, you know, for simplicity for the client, getting that information submitted, and once again, personal information, sensitive information being sent through email, is kind of scary. It's been going on for quite a few years. But I think there will be. I don't think there's much talk of it at this point. Maybe I'm wrong. There's been talk about it every year, but I haven't seen anything really changing from a regulatory standpoint.
Yeah, Vishal or Justin, anything to comment there or add?
Yeah, to answer the question directly, I do not think there's any regulatory changes that are coming that enforce privacy more than the existing frameworks that already exist. But that being said, like so at Pine, everything's uploaded through a secure portal that we created and manage and encrypt. But there are customers that still don't want to use it, right? There's people that for them, the trade-off, I think to Wayne's point of like convenience and speed, just their capabilities, they oftentimes will still email things to our advisors, right? And if that's their choice, they're probably not aware of the risks. But I think the unfortunate reality is, again, it's an infrastructure problem. Like, how do you build the infrastructure so that you can transmit all these different file types that might have different encodings and might have different ways of opening them across people, and the lowest common denominator generally wins, and that's email. So people need to be educated of like, hey, which documents is it okay? Which ones should I be more careful on? Maybe you should, put a password around that PDF before you send it. There's all these different things. And that goes back, I think, to like the literacy question that you asked earlier in that topic. But as far as regulatory, I do not think that there's any change, which is, I think the industry is up to itself to decide on this point.
Anything to add there, Vishali, or?
No, I think Wayne and Justin covered it all. It's I will say internally, the bank does have very high standards when it comes to personal information. And we are required to follow those laws and our internal processes with regards to how we handle it, how we move it around, where it's allowed to be stored, where we have to destroy it. There's a lot of that. But in terms of the channel of, getting it in the door, just like Wade and Justin have said, like some people are just trying to move it quick. So they'll use email without fully appreciating, we call it the missed finger, right? You sent it to the wrong person and oops, right? Whereas we do have a secure portal as well, exactly designed for that. And there are people that just don't want to use it.
Perfect. So there's definitely a general theme, which is data. So really, when we talk about like mortgage applications, digital, essentially we're talking about data and access to the data. Quite often I hear phrases like data is gold, data is powerful. With data, informed decisions can be made. So my next question is, in the near future, do you see financial institutions automatically sharing consumers' financial data to provide an instant mortgage approval? So will open banking remove the need for the traditional origination and adjudication? So kind of where my mind goes with it is, if I log into my online banking, can I get to a point where there's just a button there that says apply for mortgage? I push that button, and as a consumer, that's pretty much the end of my involvement. If you're able to access the data and aggregate it, I think it was Wayne that mentioned, pay information. If my, paycheck's going to this bank account, and I have X amount of money sitting in that bank account, you can kind of form, salary and what down payment might be available. Like, do you think we could get to that point? I'll maybe pass it to Vishali if you want to jump in on that first. Share your thoughts.
I think it's ideal. And I think in the purest form, if you were to get to open banking, absolutely, you could do that. But I think more realistically, what's going to happen is, there'll be little pockets where you get a little more information. And when we kind of go down the path of open banking, it might not just be everything all at once. There'll be little opportunities for more, I'll call them instant mortgages or auto adjudicated mortgages, and less time spent on data validation. So, in your example where you're going into your site and saying apply for mortgage, and then it kind of comes back with a bunch of options for you. The basis of that is really that system you're accessing, your current bank, is allowed to access information from other places. You might have investments with a certain investment broker. You might have, rental income from somewhere else and it goes into another numbered company account. You might have multiple sources, and what you're allowing is that bank has access to all of those places to be able to come and make a good decision around what you need. So I think ideally, sure, will it happen right away? I don't think so. But I do think if we do make it available, the need for origination adjudication will not entirely go away. I think there's going to be a place for auto adjudication, which is kind of what you're alluding to there. I do think that, like I said earlier, you will require human touch in the right places to enhance the experience for customers. So this will work for origination in some cases, that deals that might not fit the 80% profile, but we'll always need people to come through and support really special requirements or interesting ways that we're going to be lending in the future when we have the opportunity to look at that way.
Yeah, so it could almost be that 80, 20, 90, 10
Yeah,
cycle.
yeah. But like I
Yeah.
said, not all of it, not right away. It'll probably be in bits and pieces because even in some banks, traditional banks, and I've been in the banking industry, I think about 15, maybe 20 years at this point. And I do know like even sharing information within some of the older legacy banks is actually really difficult. They don't necessarily have access to all the things we think they might have access to internally. So, there's a bit of development and some hurdles to get through before we get there, even at the smaller scale.
Yeah, Wayne, what
But I'm not talking about EQ Bank. I'm talking about more legacy banks.
well, Wayne, what do you think about that?
Yeah, the way we think about mortgages, in our ecosystem is that, how, obviously, once again, speed, like how quickly can we pre-approve somebody with the least amount of information, documents, that sort of thing. How can we leverage, once again, those partners or the information that we may have internally? But one more step is, how can we pre-approve somebody before they even know that they want to buy a house? That's kind of the future state of NEO, is really thinking, really few steps further ahead even than what the client is thinking. So obviously that's very important, the information that potentially is going to be shared, but like Michelle said, is that, any of the incumbent banks today, to be able to share that information quickly, it's going to take some time, for sure. There's no question. And I think that that's the only concern that we would have, is be able to get that information sooner. But for sure, that part of the future is, once again, the speed of getting an application with the least amount of documents and information. And hopefully we'd have a lot of that being able to be shared with us, or once again, have that information already in our ecosystem today.
Yeah, what about yourself, Justin? Love to hear your thoughts on that.
I think it's ideal, to use the same word. It's kind of funny because I remember having this exact conversation 5 years ago, and at least here there's been minimal kind of progress. But I think that if you could get everything to work and you could get all the information shared in the right formats, then yes, you could have an instant approval. If I could just give one example. So there's a program that I worked on called Day One Certainty, and Day One Certainty was the idea that Fannie Mae, which is kind of like the same agency in the US, not exactly, they would automatically approve mortgages and like give all these guarantees to it if you use data that was from a digital direct source. So if you connected your bank account, they said, okay, yeah, for your down payment, we know the money's in there and we see the 90-day transaction history through like Plaid or Flinks or whatever. And it took a lot. It took a lot to convince the ecosystem to accept that. They for some reason, or not for some reason, just because of the inertia, when we first came out, people really wanted the PDFs, and like PDFs can be manipulated, PDFs can be photoshopped. A connection directly to your bank account is definitely more secure. But I had to go to Washington, D.C. like a number of times to convince them that like, hey, this is actually better, it's safer. And then eventually we did, and we were the first kind of company at Blend to get Day One Certainty accepted. So again, it was an ecosystem change. It was everyone rallying together saying like, this is something we want to do. And are we in a place where I think the traditional legacy banks in Canada are going to want to openly share information with their competitors? Like, I don't see why they would have that incentive. So like, even I'll share my experience. I won't say which bank, but when I was applying for pre-approval at a bank, I had to give the exact same information to a mortgage specialist, a branch, and a call center person, because I applied online, and none of them could share it. And I filled out the same PDF 3 times. So I really wish that there was, more progress. The one thing that Pine always advocates for is more competition, and the more options there are, the innovation will come out of that. The less options there are, people are going to be really kind of stagnant with what they have. So I think to get to a point where we have this expression, push button, get mortgage, or one tap mortgage. It's not even 10, no, it's lower. But we need everyone to work together so that we can get towards these outcomes.
Good point. So possible, just not tomorrow, is what I'm hearing.
Hopefully in the next 5 years.
Yeah. And actually, I like your point there on competition, because I agree. I think competition is good. It just pushes everybody to that next level. So definitely agree with the competition comment. So when we talk about like the mortgage journey, so where in that journey, whether it's origination, adjudication, or something that perhaps precedes the journey altogether, Do you see the biggest opportunities with open banking? More specifically, where do you expect to see some of the biggest open banking opportunities for mortgage lenders? I'll maybe let Justin kick us off with that one.
Yeah, I think that the biggest opportunity is reduction of paperwork, right? Because that's where you lose the most cycle time. You ask for something and they provide it, they sent the wrong document, they sent the right format, it's over email, you don't review it till the next day. So I think just like if you can cut out that piece of, let's say you need 20 pieces of documentation PDFs to get a mortgage. If you can cut out 5 of them, well, you're going to save even a few days. Really matters when your cycle time can be reduced. So I think that's the biggest opportunity. And then you got to look at it through the lens of, okay, verification of the kind of different C's of credit or whatever. You want to verify their employment, you want to verify their down payment, you want to verify their credit, you want to verify their identity. And how do you take each one of those pillars one at a time with the right kind of suppliers and vendors? And they're starting to pop up, which is great. And then you just got to embrace them. But I think the biggest opportunity, just to answer the question directly, is to reduce the need for paper documentation and requests, because every request is time lost for everybody.
Yeah. Still remember fax machines back in the day, but going with papers. Anything to kind of add their way and agree?
I think some of the regulators still require you to have a fax number.
Mm.
So.
Yeah.
Yeah, really? Oh, I didn't know.
So you have
do.
we have a fax.
Wow. Does anything come through it? That's the question. Wayne, anything to add there?
Yeah, it's funny. We don't even have a printer in our office. We're
Oh, wow.
literally like very paperless, which is when it comes to mortgages, it's kind of old school underwriters coming in going, where's the printer? I need to print documents, that sort of thing, go through these. That doesn't exist in our office. So from day one, we literally are paperless. But anyway, yeah, I agree with Justin. Obviously, the fact that the friction is in documentation. I know that you still get a lot of clients today saying, wow, I just gave you all these documents and you need more document. Like you hear that complaint over and over and again. And it's really, for us, I mean, it's really educating the client and really being very specific on the reasons why we need this information, that sort of thing. So open banking, being able to get that information, that data immediately is a game changer for sure. And I think one of the things that I want to know is how soon we can get there. And obviously Justin said that he hopes that's going to be in the next 5 years. I hope it's a lot sooner, but I tend to agree as well. So anyway.
Yeah. What are you thinking there, Vishali?
I agree with Justin and Wayne. I think they're great points. One of the places where I thought about it immediately with open banking, where we would alleviate a lot of stress, I suppose, is anti-money laundering, compliance, fraud, risk. I think those are great areas where, we're in an environment where it seems like there's new regulations coming out every month almost with regards to, what we need to do to validate what we have and who we're lending to and who our broker is and who our lawyers are, and a lot of that. And I feel like through open banking, you could actually eliminate a lot of that process because it's all open, it's all available. Like there's so much validation and check in there that you would naturally do away with some of the extra work that we're doing, or not extra, but validation work that we need to do to fulfill compliance requirements. So I think that's, yes, absolutely, from a competitive standpoint for a customer, like this is golden, but even from a back office and support perspective, there's so much opportunity there for the banks to be able to perform better because they wouldn't need to do all this work.
Yeah, great stuff. So lots of great discussion so far. I think what I want to do now is maybe just ask each of the panelists. So if you can ask your fellow panelists one question, what would that be? I'll maybe pass it to Vishali to kick that off.
Okay, so on the vein of kind of like talking about, okay, let's say this happens, we get open banking and here we are. What do you think is the key differentiator for a lender once open banking is available?
I think the key differentiator is the same thing that it is today. It's customer service, right? You rates generally all collide, they'll all be the same thing. It's always going to be customer service and getting your reputation as a reliable, fast, and high quality service provider. I think that's always going to be it, regardless if it's now 50 years ago or 50 years in the future. And that's kind of our focus. And we think technology plays the center at that. So using open banking to provide the best experience for the consumer, not just because maybe it saves the lender a few steps.
Yeah, I think, I agree with that as well. It's kind of similar to one of my questions, but I think that, it's really, is rate going to be, is there going to be a race to the bottom that we see in the digital space today? Or do we think that it's going to be customer service, speed, that sort of thing that's going to win out? And I do believe that as well would be the biggest change in the future.
So Justin, what question would you pose to your fellow panelists?
I would say, like, hey, looking into the interest rate environment that we have and just the general, I guess, like negative cloud in the air, how are you thinking about your priorities in 2023 as we get to the start of the year? And what are you doing to prepare for, I guess, an uncertain environment?
Well, we're taking this time because, of course, with the environment we're in, the market is a bit slower. And so we're taking this time to actually revisit a lot of our processes and our digital processes specifically to be able to say, okay, so let's revisit this. Let's think about how we want to do things. And can we move to our digital roadmap and what we wanted to do maybe 3 years from now? Can we actually speed that up and do that now? Because we have this opportunity and people who are available to really think about our processes differently. So we're using this time to do exactly that.
Yeah, I think, for us, really, we're not just dependent on current or future home buyers. There's a lot of existing clients out there that, that are, sitting in a situation where there's just so much financial inefficiency in each family's household that, we've kind of started to focus a little bit more on that, on the refinance side of things, and starting to see that is starting to become more and more of a bigger deal for us. So I know these interest rates are tied to obviously not just mortgages, obviously to their car loans and that sort of thing. A lot of unsecured debt as well, credit cards and things like that. So the amount of cash flow that families are experiencing today is obviously, again, with inflation, has really been depleted. So we feel educating clients in our existing ecosystem and showing them a before and after on what a more efficient situation looks like, and freeing up over $1,000 a month in cash, whatever the case is. That's kind of, we'll continue to go down that road. The other piece is just partnerships. I think Neo's done a great job at onboarding. We have over, I think, about 8,000 merchant partners. Can we leverage that a little bit? But let's look at some of our other clients, realtors and financial advisors, that sort of thing, and starting this, what we just already started is our ambassador program, and really getting everyone involved. So that again is another big piece of our future that we're working very hard on.
And I guess, Wayne, what would be your question to fellow panelists?
Yeah, I think, to go back a little bit in regards to the timing, and again, I know Justin's kind of answered my question already before, saying that, like, I believe that, going from a lead all the way to funding of a deal is going to, from my understanding, and also from some of the education I received in the way that companies are moving, how quickly they're moving in other parts of the world, even the United States, that seem to be further ahead, much further ahead than Canada when it comes to technology and mortgages. And we all know that this is, that there's no question that I think we all believe that mortgages are going to go through this transition very quickly. I guess my question to the other panelists is, how quickly do you think that we're going to be able, say in 5 years, for example, Justin, how quickly do you think we're going to be able to go from, say, an accepted offer to funding?
I think the fastest you'll see is like a week, is my guess, and I think that gives the buyer they probably need a little bit more, but the appropriate amount of cooling off time as well. Like everyone wants to go as fast as possible. Remember, there is a certain level of consumer protection that's important. And I know some lenders today, especially in different parts of the business, can fund in a week, but I'm talking about like big at scale, like most of those lenders are still a few. But I think that's where we're gonna get, with as short as like 48 hours being on the fastest side. But if someone's rushing to buy a house in 48 hours, I'd question what the urgency for that is, and if there's some other red flags.
Yeah, I think I think the 48 hours is, you know, questionable only because, like, to your point, like, why would you need a house in 48 hours? Or maybe this is it. I just think reflecting on currently, and I'm thinking specifically with our solicitors and kind of the legal end of it, and where I think there's a lot more time, and of course, because on their end, there's more due diligence to be done on their time as well. But I think that week 10 days mark is probably where I could see us shifting. Definitely 2 days to 10, just depending on the complexity of the deal. The vanilla will probably be 2 to 3 days. And then the more complex stuff will just take longer, just given it will probably require more high touch and a little more involvement versus being completely digital.
Perfect. Thanks, everyone. So we're approaching the bottom of the hour, so we have time for one final question. So to close off today's formal questions, I wanted to ask each of our panelists if you can share a key do or don't of building a digital home buyer's journey. What would you like to share? I'll maybe have Wayne kick us off.
Sorry. Yeah, so I think I think I believe, again, very strongly that communication is still a very important piece, whether it's a partner, if it's a client, in Vishali's, world, the broker itself, right? And I think the communication back and forth, but more importantly, is just that very quick, efficient communication, very specific communication. That's the biggest one, I think, for, in order for us to move a deal smoothly along and to create that 5-star process, is there still has to be currently that human touch, and that communication piece is extremely important.
Vishali, final do or don't thoughts?
Yeah, I think the big do is continue to focus on educating our customers. I think, today we're talking about open banking, but tomorrow it'll be something entirely different, right? And whatever that is, what we really have to do is establish a structure of, I think Justin and Wayne have both said it, like, get into our school systems early, our education systems early, get in front of people early to help them start understanding financial services and financial products from an early age, so that by the time they're in the prime, regardless of what the technology is, they actually understand what it's like to have money and spend money and save money. So I think that's a big do. I think a big don't is don't stop. Don't take your foot off the pedal. Like, keep pushing the boundaries, like whether that's monthly with our partners that help us get bank statements and that help us fund deals and everything. Don't stop that conversation. Challenge people to think differently about the digital journey. So that's the do, and that's the don't.
Perfect. And Justin, what about yourself? Final thoughts or to share or don't?
Yeah, I think the do is a lot what Wayne said is, even if you're trying to make everything digital, don't forget the human side. So it's important that you understand that you can do a lot online. People still want that human touch. They might not necessarily need to see that person in person, but they still want to know that there's someone out there looking out for them, especially in such a big transaction. And then the don't is, don't assume that you have to do something just because the way it's always been done. Like that's generally pretty bad explanation for why process is in place. There's oftentimes new solutions, and those solutions should be evaluated, not just saying like, well, we've always done it this way. This is the way we should do it. I think people fall into that trap.
Perfect. So that takes us to the end of today's webinar. So again, I want to thank our amazing panelists for their valuable time today. I absolutely enjoyed the discussion, personally learned a lot today. So thank you, Vishali, Justin, and Wayne. Also want to thank all the attendees for joining us today. And thank you to CLA for hosting and arranging this webinar. Final thoughts, I just want to wish everyone a safe and happy holiday season with family and friends. And with that, I will pass it back to Danielle.
Thank you so much. Did a great job closing out. I just quickly wanted to thank you all again for your incredible insight, and to you, Pat, for moderating this great discussion. I think it was really informative, and I really hope the attendees who joined also felt the same. And thank you, of course, for joining and submitting all these great questions. And before we close out, again, thank you to our sponsor, Portfolio Plus. We do encourage all of you who did attend to consider joining the CLA as a member and at least participate in the fintech lending community. This is our last webinar of the year, but there are many more coming in the new year. So stay tuned and you can find them all at lendersevent.com. But with that, we're right at the end of the hour. So thank you all for joining and have a great rest of your evening.
Thank you.
Thank you.
Thank you, everybody.